about 8% before, and now it's up down about 5.5%. Truck and bus makers are possibly the worst hit in the auto slowdown cycle that's prompted these players, including the likes of Ashok Leyland, Tata Motors and Mahindra to halt production for a few days in a row. That leaves auto ancillary players like Setco Automotive in a tough spot as inventory piles mount up. In joining us now to talk about the same and give us a gauge of just how acute this particular problem is Jitendra Gujral of the company. He's the CEO of the company. He's joining us right now. Mr. Gujral, thanks very much for taking out the time. Is this a big setback, these production day cuts that we've been seeing to the tune of about 15 odd days that most of these manufacturers have been taking?
Well, yes, we've been seeing a stock correction at our customers' levels, given the impending migration from BS4 to BS6. And while we are not hit as much because only 40% of our business comes from OEs, balance is aftermarket, which continues to track at double-digit growth. We would have definitely done much better had the downturn not hit the vehicle production.
Okay. So far, would you say that there is an inventory issue at your end or no?
Not at our end. Like I said, almost 55% of our business is aftermarket. The same products which are being supplied to our OE customers for fitment on the truck go to the aftermarket either through them or through directly from our side. So we are able to deploy the capacity in the aftermarket.
Will continue as usual at your end also, even for the upcoming future, near term? You won't need to scale back anymore?
See, as we talk till September, while some of our customers have taken extended cuts, we have not taken a single day off, right? Even in October, we normally take a 5-day break for Diwali because it's a big festival in our main plant. That is the only shutdown which we are taking, which is an annual feature. As we talk, the early reports of the season retails are encouraging compared to what it was in August and September. So I think by the time we hit November, things could only be better from the bottom, which actually was September.
Mr. Gujral, if you could just give us a percentage, what's the capacity utilization levels currently at your plants?
Currently, we are operating between 70 to 75% of our capacity, and we have prudently retimed some of our expansion, factoring that the capacity should be available before the market starts moving to the next level, and cut back on our capex for the current year.
Correct me if I'm wrong, you said the aftermarket, you've been able to clock double-digit growth. Of course, slowdown continues with the OEMs. So the loss that you're factoring in with regard to slowdown that we've seen for the OEMs, will the aftermarket completely be able to offset that, or overall, still the numbers will be muted?
No, I think if we look at the second quarter numbers for 2 months which are out, the loss in OES is in OEMs are 40-50% lower, right? Now that is not getting offset completely by aftermarket and exports, but to a large extent we are able to offset it.
Okay, and a word on exports, how are they panning out? Is there a slowdown you're witnessing compared to last year there as well?
So in exports we have a low base, it's only 5% of our turnover. So the growth is healthy on the low base, but since the base itself is 5%, even a 30% growth doesn't really compensate for OE decline, which is 40% of our turnover, right? So it's mainly the aftermarket which is cushion for us because the base is equivalent to OEM, in fact, slightly more than OEM.
Sir, there was a hope that, there could be pre-buying with regard to this CVs ahead of BS6 implementation next year, April. Do you think second half we could see that coming about? Because when that kicks in, the prices are even going to scale higher.
Yeah, I mean, pre-buy is a historically documented phenomena every time there is a migration. The only difference we see this year is that with now absolute clarity on BS4 vehicles not being carried in stocks to get sold after 1st April or after 31st March. The pre-buy will happen at the consumer level, which means if I'm a trucker, I will go and pick up a truck in the last quarter rather than paying a higher price for a BS truck in the first quarter, right? But dealers will not pick up these stocks because they cannot sell after 31st March. Manufacturers will not make these stocks because they cannot sell after 31st March. So the extent of free buy compared to the previous migrations will be lower. So a good number would be to say 40-45% of what was a normal pre-buy would be experienced in quarter 4, which is basically driven by the end consumer.
Okay, got that. Can we just, before we, close this conversation, get a sense from you as to, how is the overall demand likely to shape up? I mean, do you feel that, the sentiment which was hurt and has been hurt since the last 8 to 10 months now, it's been a niggling pain for the entire industry, is most likely to continue even post the festive season? You may see a glimmer of hope during the festive period, but post that, it's back to square one.
Yeah, I think we have to look at this in two ways. One is that the government has made a lot of encouraging moves to get the economy out of the current situation, which will have a lead time to manifest in the market, right? So if that was the only thing which was at play, we would expect quarter 4 to be a much better quarter than quarter 2 or even quarter 3. And things to be normal from Q1 of next year. Like we said, we also have this issue of migration, which is at play. So unsold stocks need to be liquidated by 31st March, and only those many stocks have to be produced which can be sold. So it's a very tightrope walking as far as our customers are concerned. They want to have the right amount of vehicles which can get sold. And it's a forecast, right? So if I put the two things together and also the impact of a very good monsoon which we have had after 3 years, I think we will start seeing healthy numbers from Q2 of next year as far as growth is concerned, because the base effect also will then come into play. Q2 this year, Q3 this year would be much lower bases compared to next year. So we are confident that definitely from Q2 of next year, if not Q1 of next year, we will be back on the growth trajectory.
Okay. Mr. Gujral, we'll leave it at that. Thank you so very much for joining us with your inputs there. So that is the management of the automotive ancillary company, Setco Automotive. The stock is down about 4%, thin on volumes a bit, about 46,000 odd shares is what we got. Shrikant Chauhan of Kotak Securities is joining us right now on the show. Shortly, T.S. Harihar will also be with us. But Shrikant, let's start off with you first. Peaks and troughs on a daily basis, you can't really put a finger to the market mood right now. What kind of a trade do you think is a safer play on the index?
Yeah, good afternoon, Devina. See, like the way the market is turning volatile and the way there is like fluctuation which is increasing, it clearly shows that the market is trying to find its bottom. It comes down and it breaks important support areas, and again it goes back. So it clearly shows that something is abnormal which is happening in the market. And whenever there is like enough sell-off or enough say like a very pessimistic sentiment, and if we see such type of volatility, always we see a very strong up move. I mean to say the move on the opposite side, and it crosses all important levels. So at least in the short term, we are of the view that the way the market today has broken the level of 11,200 and again it is recovering back, I think it is heading for the levels of 11,450 or 500 in the near term. So the strategy should be to look for adding long position at current levels, more on dips, with the final stop loss at 11,180, which is today's lowest level. And if we see the Nifty is sustaining well above the mark of 11,350, then we can even look for adding Bank Nifty to our trading portfolio. Today Bank Nifty is down mainly because IT is doing well. So whenever like we see such type of combination, we have to accept that that if IT is going to do well, then Bank Nifty is not going to do well.
Okay, and in terms of your individual stock bets for this afternoon, Shrikant, what are you choosing?
For individual stock specific, if we go through with auto sector, then number of auto companies are sustaining well their important support areas, and whenever there is selling happening in the market, we are not seeing major sell off in our auto companies, especially in Maruti, which is trading around 6700 levels, and at current levels we feel that it is again ready to move towards 7000 7050. So it's a buy at this price. It's a positional buy because we are like closing the week. So it's a buy at current levels. Keep stop loss at 6600, and again we can expect 6700 on the high side. The other stock which we like is Reliance Industries.